Hello friends, Stacy Anfinson here with your TAR Report market update specifically towards resale inventory listed over the past 14 months, and we're going to dig into the data. So I'm going to try and put this graph up here on most of my presentations so we keep it in mind in terms of what mortgage rates are doing. Once again, we'll go back to March of a year ago, and you were sitting a little bit below 4%. Obviously, we've gone over this before. The peak in rates really happened in November of last year, been on a nice downward trend to February. Up they go in March, and down they go. This is recorded the first week in April. So we'd really like to see some stability in terms of mortgage interest rates, because when you see these 3 basis points up here and then a basis point and a half down here, it's really tough for practitioners to adjust to what's going on in the market. All right, resale listings added by month. These are the counties of Wake, Durham, Orange, Johnston, Franklin, Chatham, and Harnett. And for those of you not in the area, those are really the big 7 in terms of population for the what is called the Research Triangle Park submarket. So a little bit of good news, bad news on this. If you look at the top bubble down here, we had 2399 listed in March of this year. That's down 22% compared to March of 2022. And then if you look over here, it's up 37% compared to February. Well, this is seasonal, so when you start at December here and you go up to March, that's exactly what you want to see in a seasonal pattern. So good news, bad news on that, but still below where we were a year ago, and that is definitely not helpful. Now, we have a lot of the national media who is really has between their teeth the narrative that house prices are falling. So I need you to pay attention to what I'm going over with this graph in terms of what I am saying. This is the median list price of resale listings added to the market by month. Okay, remember again, median list price of resale listings added to the market by month. This is not sales price. Remember that the list price is the seller's duty. It's what they ask, okay? The buyer's duty is to react to the ask. So a couple really interesting things here. March was the highest median list price over the prior 14 months, and that even beat the peak in May of 425. It's up 5% compared to February, and it's up 7% compared to March of last year. So that certainly does not fit the narrative that house prices are falling, because in theory that's what you would see. You'd see this is really where house price decreases begin. Going back to the fourth quarter, when you saw national home builders cut price, they cut price and that produced lower sales. So we're always looking at the trends in terms of these list prices. I also like to look at median list price per square foot and see what's going on there. Here's our valley in December at 208, and up we go to 222. It's up 6% compared to March of 2022, and it's up 3% compared to February, and it's 2% higher than the previous May peak at 218. So once again, neither of that fits the narrative of house price decline. As we talked about last month when I did this video, why are resale list prices increasing? Well, we had 1,677 resale listings on the market at month end. The sales pace, you can look at it from a 12-month period, that's a little under 2,100 per month, or a 6-month period, which really gets the increased interest rates in the fourth quarter in there. That's a little under 1,600 a month. It doesn't make a difference which sales pace you use. It's 1 month or less. And as we said last month, that is indicative of a severe undersupply, not just an undersupply, a severe undersupply. Quickly, we'll go over, for those of you probably out of the market, you want to see what is where our price ranges are. The majority of our listings are priced between $300,000 and $500,000. 3 to 400,000 is 25% market share, and 4 to 5 is 24% market share. If you look on days on market, this has gotten a little bit higher than it was last month when I did this. 26% of the market has days on market of 90 plus days or more. 0 to 10 days at 6%, and 10 to 20 days at 17%. So once again, it's kind of like a tale of two cities. These up here at the 90-day plus, the sellers have not adjusted their list price to market conditions, and they need to do that in order to obtain a buyer. So final fast facts for you. We got 5 of them just to recap. 22% the decrease in resale listings added in March versus those added in March of 2022. 5% was the increase in the median list price of resale listings added in March of this year versus March of last year. 3% was the increase in the median list price over those 2 time periods. 40% of current inventory, month-end inventory, has a DOM between 1 and 30 days, indicating a freshness to the inventory. And then here's the staleness aspect of it. 26% has an inventory at 90 days or more. So keep this in mind. Remember, these are list price metrics we're talking about, not house price metrics. So the Raleigh-Durham area is really bucking the national trend in terms of where you see house price metrics going down in a lot of areas, or list price metrics are going up. Hope these graphs were illustrative and supportive of that statement. So for information on this and other topics, please visit www.tarreport.com. That's my contact information right there. If you like this video, please click the like. If you want to subscribe, I strongly encourage you to do so. So until next time, thank you for watching.